Good afternoon, everyone, and welcome to our Red Bag Lunch and Learn series, Managing Finance in the Midst of a Crisis, presented to you by the Economic Development Committee, Austin Alumni Chapter of Delta Sigma Theta Sorority Incorporated. On behalf of our chapter president, Robin Blackman, and my co-chair, Synovia Holt-Rabb, we hope that this online seminar will be beneficial to you as we continue to navigate in this ever-changing economy. Our presenter today is Priscilla Cisneros Olvera, the Community Education Director at A+ Federal Credit Union. They have been our partners for several years to help us to provide our financial seminars. Priscilla, you have been a valuable asset to the Austin Alumni Chapter, and we know that our friends and the community will get some helpful tips from you from today's presentation. As the presentation begins, if you have any questions, we ask that you would enter them in the chat, and she will have an opportunity to answer them at the end. So we won't delay any further, and we'll begin our presentation. Priscilla, take it away, it's all yours.
Well, thank you so much for that sweet introduction. I am so glad to be here. As mentioned, I've been working with a group for a little bit now, and I love coming back. So thank you all so much for having me, and thank you all for taking time out of your day to join us for this today. And we know that the times that we are living in are difficult. And so this is such a relevant topic and such an important one to talk about, especially now. Before we get started, I just want to put this disclaimer out there. I'll give you some time to read it. And so just kind of in summary, this webinar is for educational purposes, and I don't know everything. I don't pretend to know everything, but I'm definitely here to just provide some guidance, some ideas on things that we can do if we find ourselves in a difficult situation. Okay, and so I am Priscilla Olvera. As mentioned, I am a certified credit union financial counselor. And so let's just jump right in. Of course, the past 2 years now have been presenting challenges that we maybe haven't seen before. And so with this pandemic, we may have seen certain events come up that have led us to be in a difficult situation financially. And so perhaps we have seen a death in the family. Perhaps there have been times where we have been unemployed or underemployed, right? If we perhaps need to work multiple jobs, right? That's underemployment, or maybe we're working reduced hours. But in other times, right, things that could lead to us being in a difficult financial position could include a divorce, medical expenses, maybe costly repairs. I feel like we've seen it all in the past year, right? With this winter storm and the hail, many of us had to deal with insurance claims for vehicles and our roofs and other things that were damaged, but also things that can contribute to us maybe not being as financially resilient is not saving or not saving enough, right? To be prepared for those things that may come up. And then, of course, this is why we're here, is financial literacy, just having an idea of, options of things that we can do, of course, is going to help us navigate these situations a little bit better. So, number one, we don't want to make rash decisions if we find ourselves in crisis. 2, we want to paint a financial picture, just kind of really understand what our finances look like before and what they might look like in the future. 3, determine our needs and wants, right? It's kind of a numbers game that we have to determine and figure out what we're going to do. We want to budget and track. We want to explore our options, find savings, And then last but not least, ask for help. So the first thing that I encourage us to do if we find ourselves in one of these situations is really just to try to minimize your emotions, which I know can be difficult, because if we are having a difficult time, it kind of leads to panic, right? So one thing that we need to do is pause and assess. We want to breathe, because I know we've all probably been there where you feel kind of a weight on you, and it's hard. You feel anxious, and it's hard to sleep. And so all of that, of course, is not going to contribute to us being in our best state of mind, and thus making the best decisions. So this is something that we have to do before we take any action. And then we want to narrow our options. So think about how we are going to move forward strategically. Take 24 hours. So again, if we are in this state where, we're worried, we may not be thinking things very clearly. So before we make a big decision, I would encourage us all to just take 24 hours, sleep on it. I say this for big purchases as well, right? Just think about it, see if you feel the same way the next day, and then we can explore and move forward. And write down action steps, right? Once we have an idea of what we want to do, what we need to do, then let's write it down so we make sure that we have something that we can refer back to and follow as we move forward. So some to-dos. Number one, we want to estimate our income loss. So every situation is going to be different. But for example, if you are going to have reduced hours, what can you expect from that new schedule? Or if somebody in the household lost their job, right? What are their wages? What wages are we losing? So again, that'll be very important, is just to kind of calculate the deficit that we might be facing. And then we want to make note of our expenses. Again, this is a bit of a numbers situation. So we want to know exactly what it is that we spend on a monthly basis for groceries, for our mortgage, for utilities and other bills that we have to pay. So if you don't have a budget, now is a good time to look back at your statements, to look back at your credit card, history, to see what all is happening. And we also want to calculate liquid savings. So liquid just really means, what can we easily get access to? And so this could be cash, right? If you have cash on hand, if you have money in a savings account, that's pretty easy to tap into. If you have money in a certificate of deposit, that is also usually pretty easy to access. There may be a penalty, but those are some examples of liquid savings. So again, just finding the deficit, seeing what your expenses are, and then seeing, how much of a pool you have to bring in to help during this time. So the goal will be to develop a spending and saving plan. This is the foundation to really anything, right? Is to create a budget and don't kind of just let things happen, but really take control of your money and decide in advance how you're going to utilize your funds. See how far that savings will go, again, and stretch your cash. And we're going to talk about different ideas on ways we can do that. So improving cash flow, I guess we can do this in the chat. So if you'd like to participate, if you want to send it to the host and panelists, you can do that too if you don't want to share with everybody. But do you maintain a budget? Yes or no question. Awesome. Awesome. So I'm seeing lots of yeses, and then there have been some no's, which is okay, right? This is why we're here, and hopefully after today, we'll reconsider and see if we can put that together. in the near future. So again, a budget, it tends to have a negative connotation where, we're not going to get to do something, we're not going to get to have fun or spend money just on things that we may want. That is not the purpose at all. Really, it's just us deciding in advance, like I said, how we're going to spend our money. So in order to do that, we really need to get down to, how much income is coming in, what are our expenses, and of course, we want to incorporate saving into that plan. Most people don't have enough to cover like a $500 expense is what we hear in our area. So this is a great opportunity to make sure that you're putting it in there in your plan so that it gets done, so that if something happens, we have some money for that. So I'm not going to go into this in too much detail, but we'll kind of talk about how we would do this, just kind of a big picture look at it. So one, we want to determine where we are now. So the first thing that we have to calculate is how much income we have to work with. So you would look at your pay stubs, right? If you have a salary, this can be a little bit easy, right? It doesn't change much. But if you're on an hourly wage, then maybe your paychecks will fluctuate. So just kind of determining an average, right? What you can expect from yourself. If there's somebody else in your household, a partner, or spouse, then we'll want to incorporate them as well. If you have alimony, any sort of disability checks, retirement checks, right? Anything that's coming in, we want to make sure that we include it so that we, again, can plan for the future. So that's income. We also have to look at our expenses. And again, if we don't yet have a budget, one thing that we want to look at is maybe tracking for the next month, right? What do we usually spend on groceries? What is our mortgage or rent payment? How much do we pay for the insurance, for the internet, right? Those are all things that you want to kind of know, right? And this, it will help us answer the question if you kind of ask yourself this, where does my money go, or what happened to my bonus, or what happened to this or that? This will help you really get a good look at that. So organizing and planning, we're going to talk about some ideas on how we can track, right? So it's not just about us putting together this plan on our computer or writing it down, right? We actually have to follow through with it and try to stick with it as best we can. Of course, knowing things might come up and it'll, maybe we'll deviate a little bit, but we want to stick to it as best we can. And then we'll implement, we'll modify because things change. Maybe we had a raise or a reduction in income, or maybe our expenses change. We moved, or maybe our family is growing, or maybe our child is off to college. We're not really thinking about them as much. So I don't know. Right? Things change all the time. So this is not something that you just do once and then you forget about it. You want to go back in there periodically and make sure everything still makes sense for you. But of course, in times of a crisis, we have to prioritize our spending. So we really have to look at, the essentials and maybe try to rework some things to make room in our budget just to get through this temporary challenge that we're experiencing. So again, everybody is different. And so your list may look a little bit different maybe, but this is kind of, I think, something that's basic and we might all agree on this. So essential expenses, right? These are the things that we cannot go without, that we have to make sure that we cover: our housing payment, right? Our mortgage or our rent. Groceries for the family, transportation, right? If you have a car loan, of course, gas, your at least your basic insurance, your utilities. So this is something, of course, that when we create our list of expenses, needs to be at the top of our list, right? Of things that are just we can't do without. And something to note is, we also have to kind of consider what is the actual need, right? Because sometimes we might have, several cars and we have several car loans and maybe, I've been working from home for 2 years. Maybe that extra vehicle is no longer necessary and that can really give you some room in your budget. So again, I kind of put an asterisk on this. It may be a need, but there could also be opportunities for us to rework some things, reevaluate, and see if we can potentially find some savings there. Financial priorities, these are things, in my opinion, again, that we want to try to continue to maintain. Debt payments, of course, we're going to talk about later in our presentation, why it's so important to continue to give our payments for loans and credit accounts. But perhaps if you're like me, I like to give more to my debt payments. And so if you have been paying more, then this is the time to maybe just make the minimum just to, again, get through this tough times. Savings, if you're able to, it's good to continue to save because, again, if something comes up that is absolutely something that we need to take care of, we don't have to go into debt or kind of scramble to take care of that. Even if it's just a small amount, right? If we can continue to put some money into savings, that's always helpful. And then retirement savings, again, it all depends on our situation. Maybe this will be one of the ones that goes. I know when I was looking at buying a house, I continued to give to my retirement savings, but I did reduce the amount just so that we'd be able to save up a little bit faster and meet our goal. So this is something to just kind of think about, and especially if your company does an employer match. So if you put a certain percentage, they put a certain percentage, maybe you would just contribute enough to get that free money from your company. But it all depends on the situation. But again, these are kind of the second on the list for me. And then, of course, the lifestyle choices, these are going to be things that are more wants in some cases, right? So this is going to be stuff that is personal, voluntary, and fun. Perhaps that cable expense is something that can really help us make some room in the budget, right? I feel like it's so expensive these days, like $100. So that can, be our groceries for the week. Internet, I realize now that this is more of a priority, right? Especially if we're working or if we have kids at home, they need to have access to internet. But maybe we're paying for a really, really, really fast plan, or we have a lot of extras, right? Maybe considering changing to something that's just more affordable, that still makes sense for you, would be an option. But phones, charitable giving, entertainment, pets, personal care, shopping, right? Just finding different ways that we can maybe tweak things a little bit, reduce a couple of things or completely eliminate them so that we can, again, make some room in our budget. As far as keeping up with our income and expenses, there are different tools that we can use. You can write things down, traditional paper and pen. There's an envelope system where you put cash in different envelopes that say groceries, rent, and basically when you're out of funds for that particular envelope, then you can't spend any more in that category. You have to take some from another one. There are lots of Excel spreadsheet templates out there that you can download and modify. And then there are budgeting software and online tools as well. So some of the ones that I know, My Finance, if you're an A+ member, if you're a credit union member, this is quite popular. So basically you go into your account, online banking account, you create certain categories, you put certain amounts on there, and then as your expenses come through on your account, it begins to categorize them and you're able to see your kind of mini budgets on there. Same thing with Mint. Mint does it does require that you enter your accounts, your usernames, your password. So you may not be comfortable with that. I use it and I like it, but it's not for everyone. In that case, there's an alternative called Every Dollar by Dave Ramsey. They have a free version. I think they have a paid version as well. But this one you would manually, with the free version, manually input things as you spend or as you receive income. So again, different tools. Maybe you don't like tech and this is not for you, but some ideas on how we can actually keep track of that money, because in a crisis, of course, it will be very important to ensure that every dollar is accounted for and we're not overspending. So some cost saving ideas. So this is not something that you can take on yourself. You know, if you have kids or you have a partner, you're really going to have to get everybody involved, right? So it starts with you, but you also want to include your partner, talk to them about the situation, you know, have conversations about what you're thinking of how you can move forward together. One, because it's nice to have that support of you know, somebody else being in it with you and bouncing off ideas and just knowing that you're not alone. But also you want to get the kids involved, and you know, how you go about this is totally personal, but I realize that a lot of the times we don't talk to kids about finances because we don't want to worry them. But I think it's good if they're aware of, you know, currently this is what we're trying to do. We have this goal of not spending too much money, or we have this goal of trying to save this much money. And that way they're just kind of aware of the things that they might be seeing around the house, changes that may be happening, and they can, you know, try to contribute and help as well. But I think it's good to have some communication so that they know, you know, that something is happening. So other ideas for ways to trim cost, right? The internet and data plans, dining out. I've said this before on previous webinars. This is one thing that I do that I can always work on. So obviously these are some of the things that can go. Entertainment, right? Our subscriptions are going out, or movies. While you can still do that, because sometimes you need an escape, right? You need to relieve stress. You'll just want to consider how you'll maybe tone that down or find, you know, free or low cost options to do these things. So clothing, memberships and subscriptions. Again, I feel like there's a membership for everything, you know, with the pets and the clothing and all kinds of things. So if that is something that you currently have, then, you know, that could be a place where we can save, and just consumption in general, right? Other ideas, we can sell stuff that we have around the house that we no longer use. Shop smart, right? Look at just like grocery shopping and other things, you know, cost per unit kind of thing, right? I always do this with my husband. He like, yeah, I look at all the time. He has some eye drops that are like $20 that he has to get. And everyone's like, we have to get the big one because it costs less per ounce. So, you know, some ideas, buying generic, opt for in-season produce, right? Things that are going to be less expensive. If you're going shopping, shop with a list to kind of deter the browsing and going and getting things that you necessarily, you know, don't need. With insurance policies, right? This could be an opportunity to save. And if there has been some changes in your situation, like I said, I've been working from home for quite a while. Maybe if you haven't done it recently, you can go in there, adjust your mileage, and see if you could save some money. But it's always good to just compare quotes. I feel like sometimes your policy premiums just kind of keep increasing. So it's good to just see if you're still getting a good rate. And it's easy to do online. You can do it for free. You put in your information, your home, your car, bundle, and then you'll receive your quote then and there. And sometimes if you talk to an agent, a lot of times you get phone calls after, they may be able to provide additional quotes. So that's another kind of tip with this one. You could look at modifying your deductibles temporarily to see if you can potentially save some money that way, especially if you have multiple things that you're insuring. So some ideas there, and then reviewing your pay stubs. So this is just kind of a cash flow trick, right? Just to have more money in your paycheck. So you could review your withholding deductions. If you haven't done it recently, maybe you did this when you were first employed, and maybe you haven't had a need to do it recently. But basically, the more allowances that you put, the more that you will receive per paycheck, right? You can adjust some of those things. And so if, for example, you receive a refund, a tax refund every year, maybe adjusting would just mean that you don't receive a refund, right? You're going to get that money throughout the year. So that can help. And again, adjusting those 401k contributions can be another way to just give you some extra cash during each of those pay periods. So seeking low cost services, one thing that we'll want to do, right, if it comes to it, if we lose our job, if something happens, is just try to spend as least as possible. And so finding resources will be very important. When it comes to healthcare, of course, we're living through a pandemic, so this is important. We want to just be aware of what is out there. So if you live in Travis County, for example, there is a program called the Medical Access Program, where they provide free healthcare to physicians and things for certain people. There are some requirements when it comes to income, but it's good to be aware that those programs are out there so that you can explore if you need to. There's some assistance programs for Texas when it comes to prescriptions. And let's say you don't have a insurance, or maybe you want to try and pair this with your insurance. There's a program like GoodRx where you can get discounted prescriptions. So finding things like that to save money is always good, no matter what the situation is. And then if we do lose our job, right, that means that there could be an opportunity for you to keep your health insurance through COBRA, but another alternative would be to go and go to healthcare.gov and sign up for a plan through that site. So just some things to know about. And then unemployment, if we do become unemployed, the recommendation is to apply as soon as you become unemployed, because the claim would start the day that you applied. So, just making sure that you start as soon as you can to get the maximum benefits. And with this one, you would go to twc.texas.gov, and there are organizations that can help you apply if you've never had to do this before, so that you aren't completely lost. Feel that you're confident in knowing that you're doing it correctly. So some other things, ask for help. So again, yourtexasbenefits.com, that'll kind of point out programs like the ones that we mentioned, just for different categories, groceries and health and so on and so forth. There's also another site called 211texas.org. So this can be just, this help can come from a variety of places. So your county programs will be on there. Of course, we know churches tend to be very involved and they have a lot of programs to support the community. So there's that. There are food pantries there as well, and other local organizations like the Salvation Army. And so all of these organizations will provide help for different things. It could be, help with filing unemployment. It could be, rent assistance. It could be grocery assistance or different things. So 211texas.org is a great resource to look at should you need to do that. And then family and friends, right? Family and friends. The kind of idea behind that is, this is a sensitive topic, of course, and we can't rely on everybody. But the idea is that if they can help you out temporarily, with some funds or with anything, and you can repay them later, that is going to be so helpful. And that means that you don't have to rely on credit or a loan or just another source. Because you were able to get it from them. So, and then the last one that I have here is just different. Again, just a different idea is to join your Buy Nothing group. If you've never heard of this, it's usually like on social media, and basically people just want to get rid of things without throwing it away, and it's just to kind of minimize waste and maximize the use of those items. So, I'm on my Buy Nothing, and there's kids' clothing that is given away, or food that somebody didn't like. There's a lot of things on there that are just given away by, again, just people that no longer need the items and are willing to help. And I've actually seen cases where there's a family helping another family that's in need, or with a baby on the way, and people just kind of come together to support the people in need. So that's another kind of community group that we could potentially look at. So creditors, again, I mentioned earlier, if we really want to try to continue to make our payments for loans and credit accounts. So when it comes to student loans, as we all know, federal student loans are in forbearance, and they were supposed to resume in January, but last I heard that was extended to May 1st. So that's good to know, right? This means that we're not being charged interest on our federal student loans. So that just kind of gives us some wiggle room where we're not having to make payments. If you had automatic pay, right, that stopped. But under regular times, so non-pandemic times, know that there are options for similar programs. So federal loans, they have deferment and forbearance options, which essentially both mean that you're not going to be making a payment for some time. The difference is that with some, you may need to meet certain requirements under certain situations, or with one would charge interest, one wouldn't, or the length, the time that you have where you're not making payments could have, different limits depending on which one of these you are eligible for. But again, this is something that is available should we need to, again, just to give us some more breathing room in the budget. If it comes down to it. And student, I think it's studentaid.gov, right? The federal Department of Education website, that's where we do all of this. This is something that's free. You don't have to pay anyone for it. So an option for those of us that have federal student loans. When it comes to non-federal student loans, so just other kind of loans and credit accounts, you can always reach out to your lender proactively and inquire about potentially deferring payments, right? Seeing if they have a program for hardship and seeing if you can, delay your payments. Perhaps they can look at restructuring a loan. So what does that mean? Perhaps you have a line of credit we're able to, borrow and pay back and borrow and pay back. And by them changing it to a loan where you're just paying it back, they're able to, provide a different monthly payment or a different interest rate. So again, just some options and things to ask your lenders about. Waiving late fees if they have a skip a pay. Usually there's a limit where you can do a certain number per year, or you have to wait a certain time. But if skipping a payment this month is really going to get you out of a bind, make sure that you take advantage of that. But a lot of times your loans do have to be current. So you want to, again, be proactive about this before we can't make the payment. You want to reach out to your lenders. Another idea is to change the due date. Obviously, this doesn't eliminate your payment, but maybe just the timing of it and changing it to, after you get your paycheck is going to help, give you a cushion to ensure that you pay that on time. And then a rate adjustment with like a credit card, for example. Maybe you took out that credit card when you were first building credit. You had a really high interest rate. It's been a couple of years. Your credit has improved. You've been making payments on time, for a long time. So you can try to negotiate that with your creditor and see if they can adjust your rate for you. And then any place where we can try to apply for some sort of hardship assistance is beneficial, right? So your utility companies, for example, tend to have hardship assistance programs where you maybe don't have to pay your bills. I'm not really quite sure how they work, honestly, but I know, like, I've been on a certain plans where I can contribute and kind of donate to those funds. So this does exist. And so you can always reach out to your utility company and see if they can help you. Internet and phone providers. I feel like there was so many things that were happening with the pandemic where, they were offering plans that, were just a minimal amount, right, pay, so that kids and people can have access to internet without it being such a burden, because it is expensive. So again, just trying to reach out to see who can help, in any little bit, of course, helps. But again, if we know we're going to have any trouble paying our loans, especially, but our bills too, we want to get in touch as soon as possible and understand, right, it may not completely go away. Eventually you're going to have to make those payments, or you'll continue to make payments, maybe in a modified way, but anything that gives us a little bit of room in our budget can go a long way. So savings and investments, we'll ask another question in the chat. So have you established an emergency fund? Again, you can send it to everybody, or you can send it to the host if you want to give that answer privately. Awesome. And I feel like I'm preaching to the choir here because we are in a financial seminar. Started creating one. Awesome. Need to build on that. All right. Okay. So lots of yeses. Some that are no, some that are, I could do better. So I would just encourage us, again, this is one of those things that I encourage us to start if we haven't, right? Any little bit of money is going to be helpful. And we're going to talk about ways that we can kind of build our savings. So one, contribute. Again, if we're facing challenging times, contribute if you can. But if you're not, and you're just kind of learning today and trying to see what you would need to do in the future, this is an area that can really help you. Because as I mentioned, most people do not have an emergency fund. And what we saw from the pandemic is that most people did not have enough in savings to really help, right, in time of crisis. So definitely want to start contributing or up your contributions, and really kind of just learn from what we've all experienced. And if we're in a position to do so, we want to do that. Something else that we want to consider as we're establishing our emergency fund is really what would constitute an emergency, right? Predetermine your reasons for a withdrawal. And I think, job loss and reduced hours or death in a family are definitely some worthy of withdrawing, right? But would it be, I think we have to kind of define what is an emergency, right? Things that are that we know are coming, maybe aren't prepared for, maybe aren't an emergency, right? But things that like again, the hail, that roof repair, or auto repair that we just didn't see coming, those could be some things that would be worthy of those withdrawals. So again, we don't want to touch it, but if we need to, we know that it's there, and we can absolutely use that to help us get by. But if we do have an emergency fund, we want to calculate how long we can expect that to last. So if you don't have an emergency fund, I would just encourage you to start with a set amount. I want to save $500 by X time, or I want to save $1,000 by X time. And then I will kind of do like little steps. Once you have that, then the next thing would be experts recommend you have 3 to 6 months worth of financial expenses. So, what is 3 months of expenses? Maybe even if it's just the ones that you absolutely have to pay, how much is that? And what is 3 times that, right? So that if something happens, again, you have some wiggle room. And then if you have a partner, that's one thing that I would calculate with the start of the pandemic, because I was afraid my husband was going to get laid off, is, if we lost his income, we have this much savings. So this much savings would get us through X months of expenses if I have my job. So again, just things to kind of look at, things, numbers to play with, but we definitely want to start that. And so one thing that we may consider doing that I don't encourage us to do if we are faced with a challenge might be withdrawing from our retirement accounts. So with a Roth IRA, there's 2 different types, right? Roth and traditional. With a Roth IRA, you yourself can withdraw money that you put in penalty free. So the money that you put in can be withdrawn penalty free. The earnings, however, they have rules for when it's tax free. So you must have had that Roth IRA for at least 5 years. So this is something that we have our retirement company come and speak to us at our company. And this is something that they recommend is, if you're changing your employers and you close these accounts, right, you may not have had your accounts for 5 years. So, start your Roth IRA at a credit union and just leave it there, right? Should you need to, you'll at least have that account that's been open for 5 years that you can move money into and withdraw. So just something to consider. It's either that or you're age 59 and a half or older. So that's what it takes to withdraw tax free. If you have a 401k, I would encourage you to talk to your HR department or talk to your company, the retirement company, to see what options you have. Because this one, again, withdrawals before age 59 and a half may be subject to income tax. Because this goes in after tax, you'll have to pay tax on it. And because you're withdrawing early, there is a 10% penalty for withdrawing before age 59 and a half. So you may have those 2, kind of hits to your balance there. And another option that these tend or may have are low interest loans. So a loan with these funds backing it up. But not everyone has all of these options. So you want to reach out. And again, I want to stress that I don't personally recommend this, right? Because it takes so much time for those balances to grow. And we know that the earlier we start, the higher our balances are. And so if we withdraw, our money has less time, and in general, people don't usually have enough saved for retirement. We know that, again, just from our field. So if we can avoid it, let's avoid this. And then when it comes to credit, right, we want to, I've said this multiple times now, but protect our credit, right? Make at least the minimum payment on the loans, on the credit cards. Proactively contact your creditor, again, just see what options they have. See if you're able to negotiate your rate. Again, just find creative ways to help you for the time being. But it's also good to safeguard against identity theft. So with the pandemic, there's so many scams that are taking place with the student loans, for example, right? Somebody might pretend to be a servicer, student loan servicer, and contact you because they are changing sometimes. But they'll trick you, or the vaccine. There's vaccine scams, and all kinds of scams. So just it's good to be vigilant, can keep up with what's going on so that we are aware of things that we need to look for. But one way to safeguard our identity is by looking at our credit report. So this is something that is provided by the three major bureaus. So Equifax, Experian, TransUnion all provide a report. Currently, because of the pandemic, they are providing free weekly reports as opposed to annual reports. And we can obtain it for free at annualcreditreport.com. But the reason I say is that it can safeguard against identity theft is because if somebody were to take our name or our social and use it to open an account, this would help us catch that, right? Otherwise, we may not know until we are declined for a loan, or something pops up somewhere. So I definitely encourage us to do it. And sometimes we might ask ourselves, well, how would somebody get my name or social or other information? We share a lot of information online, right? Our pet's name, the answers to security questions, and secondly, these things can be done by people that we know. So that's something to keep in mind. I know my dad, for example, he once offered to help a cousin of mine with her student loans, be a co-signer on a loan. And so he provided this information to her dad. And then it turns out, a couple months later, another semester started, and then he saw another loan under his name because they had his name and social, which he should have never provided. But again, in this case, it was family. It was supposed to be a one-time thing. And then we were able to catch it because I was looking at his credit report. I had signed him up for a credit monitoring service so that we can get alerts every time a new account was open, and we caught it. Right. So there could be times where these things happen. And so we want to be aware of that and catch things as soon as we can, report things as soon as we can. But also, the reason why I say that we want to make our payments, we want to continue to stay on top of this, is because it takes so long to recover from some of these things. So late payments, for example, it will remain on your credit report for 7 years, bankruptcy, 7 years, the Chapter 7, 10 years, a foreclosure, 7 years, collections, 7 years, right? That's how long it remains on your credit report. And obviously, if we are in a tough situation, sometimes we need to, having access to affordable credit is very helpful. So pulling your credit report. So Some financial institutions do provide your credit report. So like credit cards tend to be one of the ones that provide kind of alerts and access to your credit report. Credit Karma is one way to look at your a version of your credit report. So there's a lot of different tools out there. But this is an official report that's coming straight from the credit bureaus with the most up-to-date information, right? So again, different ways to stay on top of that. Either and all of them work, but that's just one way if you want to kind of go in there and look at all of your accounts in one place with all of the details going back, as long as you've had those accounts. So, but yes, definitely, again, want to avoid this just because it can be impactful. And then if you need to borrow, we want to look at the interest rate on the loan or the credit card, right? If there are fees, how much time you have to repay, and you can use calculators to kind of see, what your payment might look like, how much interest you would accrue over the life of the loan, just to help you make an informed decision. With credit cards, one thing that is popular could be to look at those 0% interest offers. You might get those, or that they say, transfer your balance at 0%. So, it could be a good option for you to just have some wiggle room. The only thing that we want to keep in mind is that we have to be careful because there is a set promotion period. And if you don't pay the balance by that period, then usually what happens is the interest that you saved throughout that whole time is going to become due. And at that point, again, you're in a sticky situation because, again, credit cards tend to have really high interest rates. So if you are going to do this as part of your strategy to just kind of hold you off and help you for the time being, you want to be really aware of that period and pay your balance. Know that you can pay your balance by that time. And read the fine print, right? There's a lot of important stuff in there. So I'm just going to go through these a little bit quickly because I know I'm running out of time. Home equity, right? Your home, if you have a home that you've been paying for quite some time, it could mean that you've just put a lot of money into that home. So you may not have a lot of cash, but you have a lot of equity money that you've put into that home. So, if you're in a bind where you need money, this could be something to tap into is a low interest loan, because again, the house is backing that up. There may be opportunities to itemize the interest on it. Know that usually you do have to take out large amounts. I think usually like 25,000 for these. The repayment periods are long. There's closing costs, just like there is with a home, and you have to qualify for it. But again, just kind of some options, some ideas. And of course, anytime you have a loan against your home, you have to make the payment. Otherwise, you're risking your home. So just something to just carefully consider. Consolidation loans. What this means is we're going to take out one loan and pay off multiple loans, whether it be personal loans or credit cards that maybe have high interest rates. And we're going to try to get either lower rates or maybe a longer term just to make the payment more manageable, right? Because when we have multiple loans, we have to make minimum payments for all of them versus one loan that has its one minimum payment. It can help free up some room in our budget. And then refinancing, again, rates are very attractive right now. And so if you purchased your home or refinanced when the costs or the interest rates were really high, then there could be some potential savings if you refinance. And of course, there's also closing costs. And, it's something that you, again, want to just carefully consider. And a lender can always help you estimate your costs and things like that. But there are calculators that can also help you do that without talking to somebody. I'm going to skip that. This is an example of our calculator where you put in your home, your taxes, your insurance, the original mortgage, what you think you'll get on the new one, and it'll show you, how much you'll save in interest and how much your payment will go down. So again, just some playing with some numbers. So going forward, boost your savings, right? Automate it so you don't have to think about it. It happens automatically. Try to pay down your debt so our money isn't tied up if things happen. Avoid lifestyle creep. This just means that, things that we used to be like, that's too expensive, I'm not going to do that. We do that now, right? It just happens as you make more money or things change. Try to reduce your debt, right? There are strategies, stack, snowball, that you can use to tackle that in an efficient and strategic way. And then workshops at this website, aplusfcu.org/workshops. We have recordings of past workshops that you can go in and view at your leisure. Balanced, I'll put these in the link here in a little bit. Or Brianna, if you can help me put the workshops and the balance link on there. But this has a bunch of resources, webinars, videos, but one of the main things they have is financial counselors that you can call for free. You'll just say you're with A+, and they can help you with how to apply for unemployment, or how to build a budget, or how to look at your credit report. So lots of different ways they can help. I'm done. Anything that we need to go over logistically, or questions?
Thank you, Priscilla. This was so informative. We're almost out of time, but have a couple, probably chance for 2 questions. One, should we inform the credit agencies of our change in our financial status?
Not necessarily the credit bureaus, because really they're just the intermediary, right, between you and your loan or financial institution, and then they're just reporting that information. So it's really just the creditors that you have to reach out to.
Okay. And again, I want to remind the participants, don't forget to complete our webinar survey so that we can plan for our next webinar. And just want to, with a couple of minutes left, say again, thank you, Priscilla. We value our partnership. I want to thank my fabulous co-chair, Zora Avis, and our Zora president, Robin Blackman, for this opportunity to just evaluate our finances in this time of crisis. Very helpful tips. I can definitely attest to the insurance. If you call your car insurance and say, I'm no longer driving 22 miles, mine was reduced by $40. So just appreciate that, as well as evaluating your budget. It's not a scary word, it's just a guide. And so again, we definitely thank you. So again, we want to thank our participants. Don't forget to complete the webinar survey, and we will see you again in April. Zora Avis, any closing remarks?
No, just again, thank you for attending. We hope that this was very helpful, that you gained some new tips or reminded of some that you already knew. Priscilla, wishing you all the best. We thank you so much for the partnership. To our Economic Development Committee members that are online right now, we thank you. To the community, thank you for joining us. And we look forward to many more. Thank you.
Thank you.
Oh, our tech team. Thank you, tech team.
Yes, thank you, tech team.